All right, let's unpack this. Today, we're diving deep into, well, one of the absolute giants of the global economy, a company that really shapes how billions of us get around. We're talking about Toyota.
hmm A household name for sure.
Absolutely. And we've got our hands on a pretty detailed report here. Covers the financials, their innovation pipeline, market strategy, all the key stuff.
The full picture, basically.
Right. And our mission today is to kind of cut through all that data, pull out the really important insights, and try to figure out what's actually driving this titan right now.
Yeah, what makes them tick today?
Exactly. And why should you listening care? Well, because how Toyota navigates the future of mobility, it's basically a live case study.
It really is. It shows how companies adapt to these massive shifts in tech global markets.
And even investing, right? How to think about investing today. Just looking at the numbers here, the scale is, well, it's staggering.
Huge numbers.
We're talking about $298 billion in revenue for their last fiscal year, FY24. But here's something that really jumped out at me from the data.
Okay.
If you'd put, say, $1,000 into Toyota stock back in May 2020, so 5 years ago,
Right.
by May 2025, so now-ish, that grand would be worth roughly $2,273.
Wow.
That's a 127% gain, more than doubled your money in 5 years. Pretty solid.
Yeah, that's definitely impressive. And it's just one data point, like you said, but it's one that this report helps put into context. It helps us move beyond just the name recognition. What's great about this source is it gives us that comprehensive view, not just the bottom line, but the strategy, the tech bets, how they're positioning themselves in a market that's frankly changing like crazy.
Right.
It grounds everything in data, shows us where they stand and maybe where they're heading based on what the report suggests.
Absolutely. So let's get into the core of it. Toyota, founded way back 1937. Famous for, well, reliable cars, obviously, but also pioneering the Toyota production system.
TPS. Legendary stuff. That whole approach to efficiency, quality manufacturing, it basically rewrote the rule book for factories everywhere.
It really did. And that legacy the report suggests is still a huge strength for them.
Oh, definitely. It's foundational. And they're still massive, selling over 11 million vehicles globally in FY24. That puts them right at the very top of the auto industry.
Still number one or close to it.
Right up there. But the report also highlights their diversifying. They mentioned financial services, exploring other mobility solutions. It suggests they're thinking bigger than just selling cars.
More about movement itself.
Exactly. Providing broader ways for people to move. Their stated mission, actually, as noted in the report, it centers on creating happiness through mobility, with a strong focus on sustainability, too.
Happiness through mobility. I like that framing. Okay, let's look closer at the financials because the report gives us some solid figures here.
Yeah, the numbers tell a story.
For fiscal year 2024, that ended March 2024, revenue was around $298 billion US dollars. That's a really robust jump. 21.4% year on year.
Big increase.
And net income was strong too, came in about $34.1 billion.
And that FY24 performance, it really shows a significant recovery and growth phase for them. The report kind of indicates that by 2023, they were pretty much back to pre-pandemic operational levels.
Despite challenges.
Yeah, even while navigating rising material costs, production hiccups, all that stuff.
Right.
Now, looking ahead, the forecast in the report for FY25, that's ending March 2025.
Okay.
It sees revenue climbing further, expected around $313 billion. But, and this is a really key detail, the net income forecast is, well, notably lower, projected around $24.3 billion.
Whoa, hold on. So revenue up, but profits expected to drop by like $10 billion. That's significant.
It is significant.
What does the report suggest is driving that? Is it investment? Competition?
Well, that forecast for lower profitability, even with higher expected sales, it's a really interesting point the report touches on. It suggests, potential pressures, like you said, maybe increased investment in new tech.
Electrification costs, maybe?
Could be. Or maybe aggressive pricing strategies in certain markets. They're facing intense competition. Or perhaps lingering cost headwinds. The report doesn't really pinpoint one single thing. But it does indicate this dip reflects the costs and the competitive realities they're dealing with, even as the top-line revenue grows. And yeah, a big part of where that investment is going, according to the report, is innovation, particularly, you guessed it, electrification.
Okay, so maybe that lower profit number is the cost of transformation. Makes sense. And the report points to specific new models tied to this, right?
Exactly. It highlights key upcoming vehicles, like the 6th generation RAV4.
Okay, huge seller for them. Global bestseller.
Massive. And this new version, expected around May 2025, so quite soon, will heavily feature hybrid electric and plug-in hybrid electric options, PHEVs.
More electric options for their core model. Smart.
And crucially, it also incorporates their new Arene software platform. That's Toyota's next-gen vehicle OS, designed for better connectivity, future updates, that sort of thing.
Okay, so updating the bestseller, adding more electrified choices, and baking in new core tech like Arene. That tracks. What about pure electrics? The report mentioned the BZ Woodland.
Yes, the BZ Woodland, highlighted as a new battery electric vehicle, a BEV. It premiered in North America just recently, May 2025.
And what's the angle with that one?
The report positions it as focusing on driving dynamics and interior space, targeting those utility-focused EV buyers. So these models, they fit into Toyota's larger ambition, which the report states is achieving carbon neutrality across their entire vehicle lifecycle by 2050.
2050 goal. Okay.
But what really stands out in the report is their stated strategy. They're pursuing multiple electrified pathways.
Ah, right. The multiple pathways thing. I've heard that.
Exactly. Hybrids, plug-in hybrids, and battery electric vehicles. They're not going all in solely on BEVs like some others.
So they're spreading their bets, keeping options open.
That's precisely what the report implies. It explicitly mentions their continued development, even exploration, of things like battery swapping technology.
Interesting.
And advancements in hydrogen fuel cell vehicles, like the Mirai. The report frames this as a deliberate strategy, complementing their BEV push.
Why, though? Why not just focus?
Well, it suggests a belief that different sustainable technologies might be better suited for different markets or different uses, or maybe where the infrastructure isn't quite there yet for pure EVs globally.
Okay, makes sense.
So yeah, it's a more diversified approach to future mobility compared to, say, companies putting all their eggs in the pure battery electric vehicle basket.
That diversified strategy must play a role in their just incredible global market position. The report confirms they're consistently up there, top 3 automakers globally by sales volume.
Oh yeah, they hold a very strong established position, especially known for reliability, right? In markets like the US, staples like the Camry, the RB4.
Absolutely, rock solid reputation.
But, and this is big, but the report makes clear, the competitive landscape is more intense, more complex than ever before.
You mean Tesla?
It directly names Tesla, yeah,
Yep.
as a major disruptive force, especially in the EV space. And that's clearly pushing Toyota to accelerate its own electric plans, no question.
And it's not just the usual suspects anymore, is it? We're seeing new players emerge.
Absolutely not. The report points specifically to companies like BYD as a rising force.
Oh, China.
Right, particularly highlighting their strength in EV sales and their really aggressive price competitiveness.
It's got to be putting pressure on them.
Significant pressure, especially in markets like China itself, where domestic players are just gaining ground incredibly fast. Now, they still compete fiercely with traditional rivals, Ford, GM, especially in North America.
Sure, the old guard.
But on top of all that, the report mentions these external pressures, like the threat of tariffs.
Politics and trade.
Exactly. Potential impacts from tariffs on Chinese-made EVs in Europe, the whole evolving U.S.-China trade dynamic. It all affects the sector.
So even with Toyota's brand loyalty and diverse lineup, which are huge strengths.
Huge strengths. But they're navigating price wars, geopolitical risks, and this fundamental tech shift all at once. It's a really complex global chess game they're playing.
Wow. Navigating that definitely impacts performance. Let's bring it back to you, listener, and that investment statistic we kicked off with, that 127% gain over 5 years, pretty eye-popping.
Yeah, that kind of return, turning $1,000 into over $2,270 in 5 years. It definitely reflects the company's resilience and growth over that specific period, which the report details.
So what do analysts think now, according to reports? Still bullish?
The report indicates analysts do see continued growth potential.
Yeah.
Based on their fundamentals, their innovation efforts we talked about. And it's crucial to note the report also points out the risks.
Okay, like what?
Potential for lingering supply chain volatility, for one. Those tariff threats we just discussed. And the intense and frankly increasing competition specifically in the EV market, the very segment they're trying to grow aggressively in.
Right, the area they need to succeed in long term.
Exactly. But the opportunities, as outlined, are clear too. Their leadership across multiple electrification paths, that truly global scale, and that deep, deep reservoir of brand loyalty, that still counts for a lot.
Okay. This has been a really fantastic deep dive into the source material on Toyota. Lots to digest.
Definitely.
We've covered their just immense scale and recent financial performance, that strong FY24, but then contrasted with that lower profit forecast for FY25, which is food for thought.
Mm-hmm.
We looked at their strategic moves, the focus on electrification, new models like the updated RAV4 with the Arene platform, the new BZ Woodland EV.
Key developments.
We've seen them holding their ground while battling established players and these really dynamic rising forces like Tesla and BYD in this incredibly competitive global market.
A tough environment.
And we circled back to that notable investment return over the last 5 years, highlighting their strength during that period, but with caveats about the future.
Yeah, the report really lays bare the balancing act Toyota's performing right now. You can see them leveraging their core, long-standing strengths. Quality reputation, TPS efficiency, that massive global network.
Things they're known for.
Exactly.
Mm.
But at the same time, they're under immense pressure to adapt, and adapt rapidly. They're dealing with challenges from volatile supply chains, significant geopolitical risks like tariffs, all while undertaking this fundamental transformation driven by the global push for electrification. It's a heck of a juggling act.
So, thinking about you, the listener, what should you really take away from this deep dive? I think it's clear this is about more than just one car company, right?
Oh, much more.
Toyota's story, based on the source material we've been discussing, it's a powerful case study. It shows how even the largest, most established global players have to radically evolve when faced with massive technological change and intense new competition. Sometimes from places they might not have even seen coming just a few years back.
Like the Chinese EV makers, for example.
Precisely. And that leaves us with a really compelling question to ponder, one that's kind of highlighted by the different pieces in the report.
Okay, what's that?
Well, the source notes Toyota is aggressively expanding its lineup across hybrids, plug-ins, and pure battery electrics. Plus, they're exploring hydrogen and even battery swapping. This broad approach.
Multiple pathways strategy.
Right. But the report also points out they face intense competition specifically in the pure EV market and these significant tariff threats that could really impact their global strategy. So, thinking long-term, how might this diversified multiple pathways approach fare, especially against competitors who are arguably putting all their eggs in the pure BEV basket, in this race towards carbon neutrality?
Interesting question.
Is Toyota's broad approach a strategic strength? Does it hedge risk against an uncertain future? Or could it potentially be a vulnerability? Could it slow them down if the market consolidates faster or maybe differently than they expect?
Strength or weakness?
Yeah.
That's the billion-dollar question, isn't it?
It really is. Something for all of us to think about.